It's time right now for Charting Futures with Abigail Doolittle. And Abigail, I hear you're taking a look at some of those Haven assets and the reaction that we saw a little bit earlier today.
Indeed, we are, Romaine. And interestingly, last week, of course, we had a big bid for the Haven assets. Earlier today, a modest bid, but at this point, not much of one at all. Actually, mixed. If you take a look at bond futures, that's actually priced on the Treasury futures down slightly. Gold, however, holding a gain. The yen, the all-important Haven yen, is down, though, down 0.4%. So net, Havens at this point aren't really all that worried, or signaling that they're all not that worried about the Middle East tensions, a little bit of complacency perhaps. And there is reason we take a look at this longer-term chart of the Japanese yen future. So this too is priced. This is not the dollar yen. This is yen futures, so absolute terms of yen. And we see over the last number of years, yen has really been coiling in this range, but on a set of bullish higher lows. That tells you the buyers on each dip get a little bit more bullish and constructive. The RSI on this weekly basis is rising. Net, it looks like the yen futures are set to maybe go back to that 100 level over time, not right away, but over time. In turn, that would tell you that maybe there is some uncertainty or volatility ahead for some of the risk asset markets. To talk more about this and your favorite Haven asset, or at least the one I associate with you, gold, Mike McGlone of Bloomberg Intelligence. Before we do turn to gold, what do you think about that yen chart?
I'd go with your trend. Looks like it's going that way.
It does appear as though it's going to go higher. So let's now take a look at your gold chart, because it appears that it's going higher with the yen, which tells us that Haven assets over the longer term may, in fact, be trending to the upside.
Well, the thing to remember about gold, too, it's the best month of the year for gold. Typically, it's January.
And why is that?
It's a good question. Why? But I think it's new assets. New assets come in. But the last 5 years, the average change in gold has been 5%. So what you see in this chart here, I think, let's look at first the magenta line, Matt, if you can see this, trending higher, shifting up higher in gold. But the significance also is this midpoint here in gold. That's the middle point of the range of the bear market. Gold's crossed that demarcation line. It's heading higher, and it took 6 months of consolidation to build up that trend. Also, what's notable is volatility, implied volatility in options. See this bottom here? That's the 12-month average of implied volatility, calls, puts. That low here was the lowest in about 20 years. So market trending higher, volatility bottom. That's a pretty good sign. What I look at is actually a recovering bull market, because it's got plenty of room to get back to the old highs.
Well, you know, there's a pattern within there that supports your view, too, that area of congestion. You could call it a monthly bull flag, but it is confirmed for 1900. So perhaps we are going to see gold go sharply higher. So, you know, something that we're always trying to educate our viewers on, there are options on futures. Let's take a look at how you would handle options on gold futures. And you, of course, were first an options trader back in the day, so we're very happy to have your expertise here.
Chicago Board of Trade, now the CME. I look at that and say the market's going higher, volatility is low, calls by default. So you should be looking at calls, buying calls on dips. I think that's where the value is. And the key risk is your time decay. I think the greater potential is an acceleration or breakout in the market, which would kick the calls in.